All right, everyone, welcome back. Today is Wednesday. Let's get right into this, shall we? So I'm going to switch this over in case you don't know how this works. This is how it goes. What I'm doing here is I'm going to trade the MNQ, which is the NASDAQ Micro Futures, using the Trade Scanner Pro to see if we could find any day trade opportunities. I'm using the 30-second and 1-minute time frames. The goal, of course, is I'm trying to get this Trade Evade account up to $3,000. As you can see, I'm just over $100 now in profit. I gave 1,000 back, and I'm trying to make the money back now. And I'm doing this. I'm trying. My attempt is to do this in a sustainable way. All right. So let me just turn this off over here. So there are much faster ways to beat a prop firm evaluation. And that's beyond the scope of this stream. The object of this stream, again, is to do it in a sustainable way. Because if you don't have a sustainable system, then beating the eval in a couple of days is a complete waste of time and money, because you also have to pay a setup fee. So it doesn't make sense to do that to beat the eval, typically because beating an eval requires unsustainable techniques like going all in with your size. So it's more of like a coin flip where you have to be right in order to win. If you're wrong, you're going to blow the account. It's like binary like that. That's that's a strategy to beat the eval. This is to collect payouts after you beat the eval. That's the idea. All right, so enough talk. Let's get into this. I'm going to switch this over. We had the CPI report came out about 30 minutes or an hour ago. So we're going to go MNQ1, and we can take a look and see what happened, how that had an effect on the price action. We're going to have the 1-minute time frame over here. Now, again, I know in advance what I'm going to do. Look, there's even a buy signal right there as I speak. But is that a buy signal? Yeah. But like as we know, I have to first do my analysis before I take any signals, right? That's how you use a Trade Scanner Pro properly. I'm going to change this over to 30 seconds. And we want this also to be MNQ1. Now, I'm using the micro NASDAQ futures because the regular futures, the NQ, is too big for this type of account. This is a 50K account, but it's not really 50K, as we all know. It's actually in reality it's a $2,500 account. If you don't understand that, just ask me and I'll explain it more. Hey, Voin, good to see you again. Oh, I appreciate that. Thank you so much. Thank you for retweeting my stream. I really appreciate that. I could certainly use the help. So the first step, so what I do here is I demonstrate how to use a Trade Scanner Pro. And you have to understand that it's a confirmation tool. It's not a forecasting tool. I repeat this on every stream. So on every stream, what I do is I demonstrate the 2 steps that are required. The first step is to gather our information, or essentially do our analysis. The second step is to look for confirmation using the Trade Scanner Pro. Confirmation is nothing more than the signal, right? But you can't take a signal without doing your analysis first. This signal could be random. So that's why we don't jump into a signal. And I suspect a lot of beginners do this. They just jump into a signal, it doesn't work out, and then they cancel. That's why, honestly, it's not worth it for me to even have this out there to even attempt to help people, because it just doesn't, it's not really a good use of my time as I'm learning. Anyway, so we're going to do the analysis in the 2 steps. First step, what I like to do is I like to start with the daily time frame. This is very simple, right? Daily time frame. Now, on the daily time frame, I'm not interested in all this previous data. I'm only interested in today and yesterday. That's it. So all I want to do here, and you see me do this every time, this is the first step. It takes only a couple of minutes, not even a couple of minutes, a couple of seconds. I want yesterday's low. I want today's low, which happens to be the overnight low. I want yesterday's high, and I want today's high. That's it. First step is complete. Now, Let's go to the 60-minute chart. Understand that I know in advance that I want to trade a 30-second or a 1-minute time frame. That's very important to know in advance because that's going to shape how I do this analysis. If I was using other time frames, I may have to look at other charts rather than the 60-minute. But the 60-minute is pretty adequate for most smaller time frames. Whether it's 5-minute, 15-minute, 30-minute, you could still get your context from the 60-minute. Now, I have my levels. These are my intraday levels that carry some relevance. They're marked on my chart. As you can see, that's why I gathered that from the daily time frame. Now, the 60-minute time frame helps me to answer the question, what side should I be looking for signals on? So let's look at it. I see a higher low over here. I see a higher low over here. I see higher highs. I see a higher high here. Obviously, CPI came out today and came out bullish, pushed to a higher high. Okay, that's bullish. Higher lows and higher highs that's a bullish structure. And that's pretty clear to see on this chart. So that tells me that I should lean on the bullish side. So I should be looking for longs. What else does that tell me? That tells me when it comes to these support and resistance levels, if I'm looking for longs, support levels should be more likely to hold and resistance levels should be more likely to break. So I can assign a loose probability to these levels. Meaning, if we pull all the way back to this support, for example, I should be looking for longs there. Okay? Because the general structure is bullish. But now at that point, the market might be changing. Understand something. We come up with this assumption, market is bullish, but that can change. And we have to keep that open mind. Otherwise, we can run into a lot of problems. And one of the hard parts with small time frames is it can change often. So please keep that in mind. Now, this resistance that we broke during the CPI number is now basically being retested as a support. So this may be a long here. All right, so that's my idea. So that long signal that I saw here on the 1 minute, this may be worthwhile. So let's go back to a 30-second chart because my analysis is now complete. I've done my 2 steps. I've gathered my levels and I have a sense of trend, right? Now, let's take a look at the signal because there is a signal on the chart. I don't have to do any waiting. There's something here. Now, I'm going to switch this to 2 contracts. As you know, I talked about a filtering method. I've been talking about that now for a couple of weeks. And the filtering method is you don't take the initial signal, right, which is here on the chart. You let it, you see if you get a re-entry opportunity. It looks like we have one here. This is a possible re-entry opportunity. Now, re-entry opportunity means it goes above the blue line a second time. We don't take the initial signal in this market. This environment is a hard environment. And the Trade Scanner Pro can give a lot of false signals or a lot of fake outs because the momentum in the market doesn't follow through. If this goes back above the blue line, I'm going to go long. Now, so in order to adjust to this harder environment or this lower momentum environment and to minimize stop outs and fake outs, what I suggest is you do what I call the secondary entry. You could use that as a filter. And that means you wait for a signal. You don't do anything when the signal appears. You do not jump in. You instead wait to see if the price can pull back inside between the blue line and the red line, which I like to call that the risk gap, because that red line is our risk. That's how the Trade Scanner Pro defines risk. So the area between the blue line and the red line, I like to refer to this as the risk gap. As you can see, price is inside of it. Okay, great. That's what I want to see as far as a re-entry opportunity. Sometimes we see 2 or 3 re-entry opportunities. I have to turn this on over here. Look, there's a signal occurring on the 30-second time frame, which happens to be a short signal, while we have a long on the 1 minute. That's interesting, right? Don't be confused by that. You have to go with the signal that aligns with your analysis. Your analysis carries all the weight, not the signal, which means I will ignore the short signal. I don't care if it works. It doesn't mean anything if it's not aligned with my analysis. That's very important. Okay, look, the 1 minute got stopped out. You see that? Got stopped out. Good thing I wasn't in a hurry. Good thing I waited. That would have been a loss. But I was now able to avoid a losing trade. That is very valuable. Now, the market's selling off a bit here. Okay, no problem. Looks like this short is almost at its profit objective. Okay, now maybe the market's changing, but still a little early for that. Remember, this blue line over here, that just reached its profit objective. But again, don't be confused by that. I'm just pointing it out. It doesn't mean anything. Our analysis was to lean on the long side. This line was a resistance, which theoretically should have become a support, but it looks like it's a resistance again. All right, no problem. Now, this market's selling off a bit here. Our next support isn't too far away. This market's moving pretty fast. All right, no problem. Now, here's what I have to point out. If you notice up here, it says trend is bearish. That's why it produced a short signal. And right now, the Trade Scanner Pro is in bear mode. It's looking for shorts because that says trend is bearish. So if I want to go long, I have two choices. I can switch to counter trend mode, which is the aggressive choice. And it's confusing. In fact, I got to turn all these things on. I forgot to do that. You got to make sure you do that when you have the Trade Scanner Pro. Right? Counter trend mode is right here. But I can switch to counter trend mode if I want to look for longs, meaning it's going to ignore the fact that this momentum or this trend is bearish. It's going to ignore that. And instead, it's just going to look for the trade signal that it looks for, regardless of the trend on your specific time frame. I know that's confusing. So to minimize confusion, the easiest thing to do is to wait until it realigns, meaning this market needs to reverse. It needs to give us some bullish candles for a little while. This thing needs to say trend is bullish, which again, it changes very often, and then look for long signals on this time frame. That's the easiest option. That's the easiest choice. Now, and I've suggested this before, when we're in the middle of two levels, right? We have a support over here, and then we have this level over here. When we're in the middle like this, it's not a good idea to switch to counter trend mode in the middle of nowhere like this. In this situation right here, it's best to just go with the momentum of the time frame. So I'm not changing this to counter trend mode. Either we go back into bullish mode, or I possibly consider an aggressive short signal, because that's what it's looking for right now. Same with the 1 minute. Look at the 1 minute time frame. What does it say? Trend is bearish. You have to pay attention to that. I know that's not very user friendly. I understand. And Stain was working on, we were working on a way to make that easier on the eye or more user friendly, but he's been busy. So I don't think I'm going to get any updates for the Trade Scanner Pro anytime soon. So we have to work with this the best way we can. That's why I'm not very encouraged to really promote it, because people aren't going to get it anyway. Maybe if I come up with some better training materials, then that would be helpful. Now, no, if you notice here, this thing, oh, I thought it switched. Okay, it might, sometimes what happens is you'll see this thing switch back and forth. You'll see this switch back and forth, right? But we're gonna wait. We're gonna wait until that turns bullish. Has this one turned? No, they're both bearish right now. So right now, the Trade Scanner Pro is looking for a short, meaning it's looking for a pullback just like this. And if it sees the reversal, it's going to give us a short signal, which I'm open to at this point, because we're in the middle of nowhere. We're in between these two levels. We're not sitting at support, and there is some bearish momentum in the market, or at least there was, right? But it's turning. As you can see, it's trying to turn. So, all right, no problem. Let the market figure itself out. Now, we have 10 minutes before 10 o'clock. The 10 o'clock candle is very significant for day trades. The 10 o'clock candle establishes the opening range. If you're not familiar with the opening range, you can Google that. There's something called the opening range breakout. It's statistically relevant, but it's not exactly a great system to base trades on, There are a lot of fake gurus out there. They have videos. I'm going to show you the only way to trade the opening range. Like blah, 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 right? You don't need that nonsense. All you need to understand is that the opening range offers some more levels that we can consider in our context. That's all. So if we break above the opening range, we should look for longs. If we go below the opening range, we should look for shorts. If we're inside the opening range, then we should just try to buy near the support and sell near the resistance if there's no trend. It's that simple. And the Trade Scanner Pro can confirm. So you see, look, the Trade Scanner, this thing was selling off, and now it's coming back. That's why we cannot react to candles. We cannot react. Let the market figure itself out. Wait for confirmations. If we were using something like the RSI, we may have shorted it over here or something. I don't know. Right? Or some kind of other tool may have gotten us short right there. Bad place to be short. The market just squeezed everyone. Now, it's not really a bad place. It's just it's random. There was no support there. It just came out of nowhere. Right? Some buyers or whatever came out of nowhere. Look, now we're retesting this resistance. Okay, have my trends changed yet? I don't think so. No, my trends haven't changed yet. It still says bearish. I'm just curious. Let's just see. Would have counter trend mode produced a trade there? Oh, look at that. Look at that. Counter trend mode produced a trade at that reversal point. Interestingly enough, if we were in counter trend mode, we would have caught a huge trade right there, a nice trade. All right, but whatever. It went to the profit objective. Nice. But I'm not in counter trend mode. So you can't, if that was part of our plan, now you could say, well, we were originally looking for longs. Yes, we were. But was that an official support level? I mean, not, well, I guess we could have made some argument there. If we had looked at this over here, we possibly could have made some argument. But what am I going to do? The reason why I'm not so quick to show counter trend mode is because I know it's confusing for people. And that means we're going to miss opportunities. Now look, trend changed back to bullish. See that? See? And I told you the easiest thing to do is to wait for something like this and now wait for pullbacks. Now, keep in mind, if we get a pullback and the pullback is too steep, meaning we pull back to here, then this will probably change back to bearish. But now in that scenario, because I see that this market's not really bearish, because if it was bearish, this should have continued. We should not have seen this. So the fact that I see this market I believe this market is bullish. So if we pull back and the momentum on this time frame turns bearish, I will go into counter trend mode on the next pullback if I have to, because I'm confident that this market is bullish now after seeing that type of reversal. See how it's pulling back? Okay, cool. If it pulls back too far, this trend is going to turn red. It's going to turn bearish, and then it's not going to give me long signals anymore. So I have to switch to counter trend mode to get the long signals. Yes, it's more aggressive to do it that way. The simple and conservative way is just let the long signals come back to the market. Eventually, if this market is truly strong, the long signals will reappear eventually. But I'm not going to sit here for 3 hours streaming. So there are other opportunities if you know how to use the Trade Scanner Pro. Here we go. This thing just turned bearish. See that? So now it's not looking for longs. It's looking for shorts. Now I'm going to switch to counter trend mode so that I can get a long signal, because that's what I'm interested in. Because I'm convinced after this type of move, I'm convinced that this market is not bearish. It's bullish. So I have no problem being in counter trend mode. In fact, I'm going to switch this one over too to counter trend mode for that reason. Is this the trend? No, the trend is on this time frame. The trend is bullish. All right, I don't have to switch it on my 1 minute, just my 30-second. That's the nature of these small time frames. Okay, that's how these small time frames they change. A lot of stuff changes on them frequently, and you need to be on top of it. If that's too much for you, I recommend larger time frames, like a 5-minute chart or a 15-minute chart. This stuff doesn't change as quickly. but the concepts are still the same, especially the reentry filter that I just described. That's especially important when you're dealing with 5-minute, 15-minute, 30-minute time frames like that. Make sense? So if you guys have any questions, let me know. What is your opinion? Okay, so I just saw your question there, Voin. Yeah, clearly, I don't know what the actual report, the CPI report, I don't know exactly what the numbers were that came out because I don't bother looking at that stuff. I only look at the price action. And I mean, the market spiked higher. So I would imagine, based on that, the CPI must have come out cooler than expected, right? Inflation must be less than they were anticipating. I suspect that's what the CPI must have said with the NASDAQ spiking. Wait, would that be right? Because, well, that would be positive. But if there's less inflation, well, I guess the market would like that, I guess. I don't know. Because inflationary markets, inflation is actually good for markets, right? More inflation means NASDAQ's only going higher in the long run because our dollar becomes worth less and it costs more money to buy these markets. So that's why, I don't sit there and put my economist hat on and pretend to be an economist because I don't even think they know what they're talking about half the time. They're just making stuff up. Or they go on their theories, and if the theory works out, oh, I'm a genius, you see that? And if the theory doesn't work out, they say, well, markets are just so random. I don't know, it's just the way it is. But it's just noise. We have to go by, the 30-year time frame. That's the time frame I watch as a renowned economist. So 2.8 and the consensus was 2.9. All right, so it came a little cooler than expected. Okay, so you see, I had no idea what the report was, but I was able to describe it to you just based on what I saw in the price action. That bullish spike, that initial spike, told me that something good must have come out. So what would be good? I guess a lower number, a lower print on the CPI. All right. I mean, it's not a huge number, but I guess they were happy that it's a little bit less. I don't know. So as a day trader, that number, unless you're trying to trade the CPI report, which there are ways to do, it's meaningless. Even if you're trying to trade the CPI report, the outcome is meaningless because all you're doing is bracketing the structure around the price at the time, and it either spikes higher or spikes lower, and that's it. It's a coin flip. There's nothing more than that. You have to look at this from the simplest perspective. Most people overcomplicate things. As a day trader, especially on these time frames, the outcome of the CPI means absolutely nothing. It can set the tone for the day, which is cool, but price action will tell me that. I don't need the CPI to tell me that. So is this thing bearish? Let's see. Am I seeing bearish over here? I got to check this. You see, I got to check this constantly because I'm in counter trend mode right now. If that switches back to bullish, I need to get out of counter trend mode if I'm looking for long confirmations. Again, this is only something that's a constant maintenance. It's a high maintenance on very small time frames, like a 30-second chart. Now, see, a move like this, it's consolidating right now, as we could see. It's a higher low consolidation, which is, I would expect something like this if the market is bullish, if we're generally strong. That's a higher low consolidation. It'd be nice if we could get a signal here, but if it doesn't want to give me a signal, what am I going to do? I'm not going to force it. Another possibility, if you're very aggressive, is you could go to a 15-second time frame, but I won't do that because I had to establish some sort of rules for this stream, and the rules are 30-second or 1-minute time frames, no more, no less, because otherwise it becomes very confusing. If I'm jumping around, like 1 minute I'm on a 5-minute chart, and then I'm on a 30-second chart, and then I'm on a 15-second chart. How am I supposed to teach people how to use this thing? You could do that. You're free to do that on your own if you're more advanced, and that's okay if you understand what you're looking for. But if I'm doing that here, I think that's just a poor example for teaching purposes. Okay, let me just take a look up here. We're switching back to bullish. See, back to bullish. Okay, no problem. Take counter trend mode off. Got to pay attention to that. Got to pay attention to that. That's particular to 30-second and 1 minute time frames. So again, the Trade Scanner Pro keeps me out of trouble in a way. Now you say, oh, but it's running away without you. Maybe, maybe not. Markets are highly random. I could have thought that back here too. It's running away without me. And I could have gotten long and I would have gotten stopped out. Remember, the 1 minute called a long over there. And I was able to avoid that stop out because of my filtering method. So it helps a lot when you have an extra layer of rules to adjust to the environment. You know, a couple of months ago, this environment was very good for momentum. There was a lot of momentum. So when a signal would go off on the Trade Scanner Pro, it would run 30 points, 40 points pretty quickly. And that's what you want when you're using a tool like this. So when you're in a slower environment like we are right now, you have to make some adjustments. You don't have to throw your strategy out and find another one. You don't have to do that. You simply have to make adjustments for the slower momentum. And that's what I've done. Instead of taking the initial entry, you simply wait for a secondary or third entry. It's very common. It happens all the time. Excuse me. And it saves you from being faked out. In my previous two streams, that filter allowed me to come out green for the day. That filter, because I'm able to avoid more stop outs. Of course, look, I'm not going to be able to avoid every stop out, but this was a complete, stop out, and I was able to avoid that. So I'd rather be zero than some minus number. I mean, I would probably be minus 60 or maybe $100 right now if I got stopped out. What was the stop out? It'll tell me right here. 32 points. So if I got stopped out for 32 points, assuming that I bought it at the entry price, that's $60 or $64 per contract. If I had two contracts, that would be $120. I'd be minus $120 right now. But instead, I'm zero because of a filter. So anyway, so how are you guys doing out there? Let me know in the comments. Are you guys taking trades? I'm not going to yell at you. Everyone has like their own way of doing things. I'm just demonstrating how the Trade Scanner Pro can be used to advance a prop firm evaluation. But like I said before at the beginning of the stream, this is not the ideal way to beat an evaluation. When you take an evaluation, the idea is to beat the evaluation as quickly as possible. You want to do it at least in a couple of days or something like that. With Apex, if I were to beat the evaluation in 1 day, for example, they don't really like that. Now, sometimes they have specials where they say it's okay, but they don't really want you to do that for obvious reasons because they don't want you to win. So they say it's for risk, blah, 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 consistency. That's all that's all BS. It's all nonsense. They don't want you to win. That they profit from us losing, that's a fact. That's it. We have to accept that. They have a 7-day rule, their consistency rule. So even if I beat the eval in 1 day, I would have to basically take some basic little mini trades for 6 days so that they have some data to go by before I can actually move on to the payout phase. That's their particular rule. Each prop firm has its own rule as far as consistency goes. I just test some methods. I will in the coming future. Okay. That's no problem. That's why you watch these streams and you learn. I mean, even if you don't use a Trade Scanner Pro, there's a lot to learn here. There's a lot to learn about position sizing. There's a lot to learn about just interpreting price action and navigating these markets as they change. That's the hardest part of this game is we find something that we think it works, right? And we're fooled into believing that it works, but really it's just delivering random outcomes. It just happens to coincidentally align with the price action at the moment, but it's not sustainable. You have to understand the first concept. Whenever I talk to someone that's new, the first thing I say to them is, listen, forget charts. We're not going to talk about charts because everyone wants to jump into the charts. Forget charts. The first concept that you need to internalize, the most valuable concept, is markets are mostly random. And I know people take it for granted. They're like, yeah. But the sooner you become intimately familiar with that concept, markets are mostly random, it will save you a lot of time, because that means when someone says to you, oh, I've got a magical RSI parameter strategy that will show you how to do a market maker, blah, 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 you will see right through it because you know that markets are mostly random. Another thing is that if someone truly has a system with a statistical advantage, a true statistical advantage, there's absolutely no incentive to share it. There is no economic incentive to share it, because what will happen, and all systems, by the way, become obsolete because the market changes. All someone is doing is they're making that obsolescence process faster by sharing it with others. There is no economic incentive to share a profitable system. When I mean it's a profitable system, I'm talking about a system with a specific statistical advantage. The Trade Scanner Pro is not really a system, it's a confirmation tool. So that's why I can share it, and as a system by itself, I would say it's a 50% system. It's a random system. That's why it's important to improve that percentage by answering the question, what side should I be looking for confirmations on? And that's what gives us positive alpha. So, because there's some interpretation involved, it's not the same as a statistical system, like a mathematical system that is purely mechanical. That's why you can't share those. All right. Now, the Trade Scanner Pro, can I also use? Of course. Yeah. You can use it on Bitcoin and Ethereum. Absolutely. In fact, I used to, if you look back on my streams a couple of months before I was doing the NASDAQ futures, I was actually on my afternoon streams, my Monday 3 o'clock streams, I would trade Bitcoin. I would go to the Bitcoin perp futures and I would trade Bitcoin using the Trade Scanner Pro. I was doing that for a while. I was doing that for practically a year. And I switched to this because I thought there'd be more interest in it. But based on the numbers that I see here, clearly I was wrong. Now, I thought there'd be more interest in this because I've watched a number of fake gurus who had big followings watching them at this time, and they would be doing NASDAQ futures. I'm like, oh, well, I trade NASDAQ futures anyway for myself. That's what I do. So that's something that I can talk a lot about. And clearly there's a lot of interest in it. But yeah, if YouTube promotes your stream, there's interest in it. If you're on the suggested feed, that doesn't happen for me. So I get this stream is a complete waste of time, in my opinion, because it never grows, right? And it doesn't grow because YouTube is not going to, the YouTube algorithm doesn't pick this up. That's why. So in order for me to grow this stream, I have to do uploads. So I've been working on an idea for a workflow where I could make this more in line with what the YouTube algorithm wants, because that's how this world works. It's all about the algorithm, and if you don't please the algorithm, it's just a total waste of time. And that's what I'm going through. So I still do it because I enjoy doing it. Some people like to watch me, a couple people, but there is some value here. And once I figure out how to utilize this content properly, which I'm figuring out, I think I'll get some more traction. Because I mean, I watch people that are just complete morons. I'm sorry, they're morons. And they don't actually provide something that's useful or sustainable. They provide entertainment, is what they provide. And it works very well. But that's not the reason why they have such a large following. The large following comes from consistent output of content. That's what it is. And it's upload content, it's not streaming content. And that's where I lack. So I talk about this all the time. I'm working on it. I think I'm on the right track as far as that goes. So hopefully soon I can start implementing that, and hopefully I see some traction. If I do that and I see nothing, I'm just going to stop these streams because it's not worth it for me to do it at this time. It's just not. I could be working on my real account right now, not this. So anyway, we'll see how that goes. So this is this time of day, 9:30 to 10:30 Eastern time. This is the most opportune time to day trade the NASDAQ futures. It's when volume is the greatest and momentum is the greatest, usually. Not all the time, but usually. So if you're going to trade these markets, and you're going to trade on these time frames, this is the prime time. Outside of this time, you're asking for trouble. It's possible, but usually it's problematic. Often it is. I try to trade the afternoon sessions. Sometimes I do okay. Sometimes it's just a complete waste. So this is really like the prime time. And I'm using this time to do this, which is really, like I keep saying, not the best use of my time. So, and I appreciate you who come, like Voin and whoever comes along, but people don't stick around for very long. I see some familiar names, and then they stop coming, and I understand. That's the cycle of the retail trader. The retail trader. This is not a sustainable game, and it's not practical. Most retail traders, they go through the same thing. They try it out for a little while, and then they lose all their money, and then they quit. And that process is maybe 2 months, 3 months, maybe 6 months. That's how it is. And they say, this is not worth it. I'll go do something else. And they're right most of the time. This is not a game I would recommend for most people. Oh, hey, could you upload clips of that content? That's a good question. Well, it's a pain for me to do that. And the reason why I don't do that is because, for a couple of reasons. I can fake the trades, number one. If I upload, I can just upload the good trades, right? And avoid the bad trades, just like all the fake gurus do. That's why I stream and I don't upload. So it's very easy to cherry pick the outcomes in that scenario. Also, when I trade for myself, sometimes I take way more aggressive trades than what you see here. And sometimes they work out really well. Sometimes they don't. And I don't know if that's a good example to show people, because someone that's newer may misunderstand what I'm doing. I don't do that all the time, but I do take some aggressive trades that I just think like, man, this definitely wouldn't be a good thing for a beginner. Especially now with prop firms, with prop firms, it's okay because if you blow your account, it doesn't cost a whole lot of money, right? $30, $50. But you can easily blow $2,500. And some of these trades that I take, you could blow $2,500 in minute, not even in 1 minute. You can blow $2,500. I've done it. Okay, so the Trade Scanner Pro can just be used with TradingView. Yes, I only have it set up for TradingView. The script is only written for TradingView, and my developer, he's not available, so I don't think I'm going to be able to get this translated into any other platform, not anytime soon. So, good questions. So this is, there's nothing going on here. Look, my trends right here on these time frames, they're bullish. That's good. I would like to see a long signal. I agreed earlier. I've determined that I should be leaning on the long side. So far, the market agrees with that. I don't think it matters so much as long as you explain your thought process. Okay, I'm just looking at A's. Okay, well, thanks for the feedback. I just see a lot of fake gurus doing the uploads, and clearly they're cherry picking, and I don't like that idea. I mean, but also, yeah, it is kind of a pain. But I appreciate the feedback. I mean, look, I'm open to all feedback, and I have an open mind, and I'm open to these things. But I do have a plan where I'm planning to basically repurpose these streams that, but like basically upload them, but a segment of them, not the whole hour. So I'm going to try that and see if I get some traction with that. I think I would, because it'll be more algorithm friendly. It'll be more YouTube algorithm. These streams are not algorithm friendly at all. And even if I do like a quick clip and I just upload that, that's still not algo friendly. There are a couple of things, like you have to set up certain things. Certain things have to be in the description. Certain, the thumbnail needs to be thought, has to have a little more thought behind it. There's a lot of details that go into it to be algorithm friendly. And then if the algorithm sees some traction, it pushes you to a larger group. If it gets clicks, it pushes you to a larger group. And it's not just the content itself. There needs to be likes and comments on the video. If there's no comments, the algo doesn't like it. So I have to basically build up comments and community on those videos. If no one's commenting on them, and that includes me as well, then the algo is like, this is nonsense. So there's a lot of details that go into that, and that's where these people get traction. It's amazing. And then you see some videos out there which are in other genres or on other niches, where they'll just upload a 10-minute video on just like reacting to someone else's whatever, and they get like 10 million views. And all they're doing is reacting to someone else's whatever, but it's because it causes such a reaction and they get so many comments. It's a video that's widely watched, and the algorithm pushes it and pushes it and pushes it. That's how that works. So there is a science to it. There's definitely a science to it. Also, hey, you had that question. You asked that question on Monday before as I was signing off of the stream. You asked about the Merlin interview. I'm still working on it. I've just been a little bit delayed because I haven't been able to work on it as much as I want to. I'm just cleaning it up. I'm cutting out. As I go back and I watch my interview and I watch my streams, I say way too many times. It's really annoying. I'm trying to be very conscious today not to say. And I'm watching these videos and I'm like and I it bothers me. So I'm cutting out most of those ums in that interview because I ummed a lot. And also, there was some sound feedback. I'm trying to clean that up. I've cleaned up some of it, but there's only so much I could do on that. So I'm just gonna have to deal with that. And I'm just tightening it up a bit. That's it. And then so I should have that interview out hopefully by next week. It's gonna take me a few more days because that's not the only thing I work on. But I just said, but you hear that? I caught that one. So that's what I'm looking at with that, and I plan to have it out soon. I like most of the interview. I like it. I think it has some compelling points, especially about how these guys started out. It's interesting, some historical perspective as well. I think that's interesting. Also, I heard from I heard from my Italians, my Italians that I met. I just again that I met in Andorra during the ICTC, and Mauro is now in line for the next interview. So we're just confirming a time with him now, and it'll be me, Nick, and Mauro. And the Italians are the best; they're the funniest. Merlin was great, but the Italians are they're just hilarious. Just the accent alone is just makes me laugh. They're just so funny. So we'll get Mauro on here. Now, Mauro is an older guy. I think he's around my age. And he has also his unique experience. He trades more what are called time cycles. So we could learn more about that and about his techniques. He's also a musician, apparently. So we can find out about that and how maybe that is relative to his perspective on the markets. So yeah, after the Merlin interview, I was like, okay, I don't want to do 10 million of these interviews, and then I'm stuck doing all this work that I can't get done on time. So that's why I said, all right, let me get this interview like mostly worked out, and it is. It's mostly cut. I'm about maybe I only have maybe another 20 minutes to run through that thing, and the interview is like an hour long, and I'm just running through cutting out the ums and just cutting out anything else that I think is just what maybe awkward or an awkward pause or whatever. I'm just cutting that stuff out and whatever. So I should have that done pretty soon. But I don't want to have like this whole workload of interviews that I have to like cut and I'll never get anything done. So Mauro will be I'll be doing that interview. We're just going to agree on a day and then I'll have that one. So that should be fun. And then after that, I'll look to the other guys because there's a whole bunch of guys. I want to talk to Hamaha. I want to talk to Excavo. And these guys, I'm sure they'll do it if I ask them. But I haven't asked them yet because I want to make sure I get these things out of the way and I want to get them on YouTube so that they're done and then I'm free to do another one. It's a slow process, but I don't have a team. What am I going to do? But anyway, yeah, I want to get them on. Also, Malik. Malik's interesting. He's a young guy. These young guys really impress me. They really do because they're so advanced for their age. They have so much knowledge for their age. Especially when I think back to when I was their age. I knew nothing, absolutely nothing. And they know so much. The funny part was back then I knew nothing and I was actually able to make money. And for the longest time, for a whole decade, I couldn't figure out how I made money at that time. It took me a while to figure it out. At the time, I had no clue how I was making money. And then I went through years of not making money. So I made money simply because we had advantages that the majority of the population at the time lacked. It was that simple. And once those advantages were taken away, I couldn't make money anymore. And neither could most people that I started with. Man, this market, look, this is a slow grind. I'm not getting any signals on this time frame. What am I going to do? At least I'm not shorting it. What time is it? Oh, we still got a little time. We must still get a signal. So anyway, sometimes these markets are going to be like this, and they could be boring. There may be nothing to do. One solution to this, by the way, if you're using TradingView, is you just go to you can add a notification right here on TradingView. You click that and you select the Trade Scanner Pro, and what it will do is it will send you an email or a text, like however you want it to respond to you, and it will tell you when a new signal pops up, stop loss was reached. It'll tell you that, so you don't have to sit in front of your computer for hours. That's also when I first started the Trade Scanner Pro. That's what I was encouraging people to do because I would not expect a beginner to be able to work on these time frames and sit in front of a computer. And it's less than ideal to sit in front of a computer for a couple of hours looking for signals. It's really not a good use of your time. So I do it to demonstrate the Trade Scanner Pro. And when I trade without the Trade Scanner Pro, I'm looking at even smaller time frames, and I'm looking to just get in and out and be done with this in 30 minutes. Like I do not want to spend 8 hours in front of my computer. It's a total waste of time. And I've done it for a long time. So trust me, there are way better things you could be doing with your time. In the beginning, if you want to do it in the beginning just to increase your experience and accelerate your learning curve, okay. But it's not something that you want to do regularly. And the number one reason is the more time you spend in front of the market, the more of a chance you're going to give your money back. That's just the way it is. Markets are not ripe with opportunity and inefficiency where you could just be making money all day. It's the opposite. Good opportunities are infrequent, You jump on one. If you get one, the first trade especially, you walk away. That's the best thing to do. Walk away. Remember, there's a cost. Every time you place a trade, it costs you money. People don't realize that. That cost is what renders most strategies unprofitable. The cost. Otherwise, if there was no cost, we could go all in and make like a tick or two, and that would be a profitable strategy. But that doesn't work because of the cost. All right, what are you saying here? In order to access the Trade Scanner Pro, is it necessary to have PayPal? No, you don't have to have PayPal. That's a good question. You can use a regular card through Stripe. There's a Stripe integration. So you can also use Stripe. And if you want to pay like with USDT or something like that, you could do that, but that's not automated. So you would have to send me an email. I'll send you a USDT address, or USDC actually. I prefer USDC because Tether sucks. And you could pay me in USDC, but when I do that, that's only for yearlies. I'm not going to do that monthly. Look at this thing go. No signal. But all right, no problem. No problem. Look at this market. Look at what this market has done so far. We had this, it consolidated, and it's just the slow grind. This right here, you want to know what happens typically in these environments, in these situations? What happens is a move like this prompts a lot of people to think short. So, oh, the market's weak, it's weak. So they start shorting the pullbacks. They start shorting this. It's going to work now. They make a little money, maybe. They see a green, and then it stops them out, or they stay in and they continue to add, and you are now caught in the slow grind. This is the worst. This is the worst to be shorting because it doesn't pull back. Maybe at some random point it will. Like it tried, okay, it's a short, it's a short. And your RSI is notorious for getting you short in these situations and here and here. I guarantee the RSI is giving a short signal. Something like that. And this market is not a short, not right now. So you got to be careful of those slow grinds. They're very hard. Slow grinds are the worst. The other, and you say, okay, if the slow grind is just going to keep, if the grind is going to continue higher, just go long and walk away. Well, that would be a nice idea too. But there's one problem. The problem is that this thing may pull back out of nowhere unexpectedly, randomly. You don't know where that top is going to come into play. It may come now, it may come in an hour. That's the hard part. It's like you're always dealing with this possible top. And so it's a very hard game. So if you're going to lean on a side, the side should be the long side, and you have to be prepared for buying the top because it never pulls back. That's the problem with the slow grind. It never really pulls back. That's why we're not getting any signals. If I want to get a signal, I'm going to have to go to like a 5-second chart. Watch. We get heads up. Look, there was a signal back here, and it's just been a slow grind since. 5 seconds. I'm not going to trade a 5-second chart. Here's the 15-second chart. No, oh, there was one signal here. Was that it? Was that stopped out? No, it was a profit. 19 points. But that's what you're dealing with the slow grind. It's very tricky. So at any moment, that pullback may assert itself. And if you're sitting there, the other side of the mistake is you buy some, it goes higher. You buy some more, it goes higher. Oh, this is easy. You buy some more on the breakout, it goes higher. Ah, this is great. And then you get stuck in the pullback, the real pullback. And then it goes a lot lower than you thought. Maybe not this time, but that's eventually what's going to happen, and it's going to wipe you out. Any profits that you make now, you're going to give them back. And if you're in a prop account, you're going to blow the account. I've done it. I've tried all those dollar cost averaging methods because dollar cost averaging is a nice way to do things when you have a stable market. And I thought, what an easy way to beat a prop firm. I'll just do it with DCA. No way. That's why they don't let you hold overnights, number one. because you can more likely beat them. Or if the market goes your way overnight, right? So most prop firms, not all of them, most of them will not let you take overnights. And they have all these things where they squeeze you into this very, very limited box of what you can do. And they do that because they know that these other strategies can be profitable in the real world, and they don't want that. But there's still some significant risks that you have to consider. Like, oh, DCA, okay, cool. I'll do that and I'll intraday and I'll make some money. Right. It works in these slower environments, but when there's a real pullback, which can be, it can come out from some unexpected news item. Someone tweets something. Next thing you know, the NASDAQ pulls back 200 points and you're long. What do you do in that situation? Well, now you're stuck. You either bang it out, take the loss, or you hope it comes back. Usually the right thing to do is to bang it out. So that's hard. That's very hard. I don't like those type of risks. That's why I prefer the smaller time frames. I like to be in, I like to be out, and I don't want to worry about some random tweet coming out and throwing everything off. But that's the kind of environment we're in. And keep in mind how much time we got. We got a few more minutes. Doesn't look like I'm going to get any trades, but hey, that's okay. A 0 day is better than a minus day. So far, this day, based on the signal that we saw on that 1 minute chart, this day would be a minus $120 day, theoretically. But I was able to avoid that trade because of the filter, and I'm still at 0. So 0 is better than minus 120. So what I was going to say too is in this environment, we have lower volume, and volume is going to continue to get lower. Now, there's all kinds of ways to measure volume. I'm not talking about the overall volume or whatever. People like to, like, oh, we've had the most volume since whatever. Like they always find some way to embellish their point or whatever. But there is a change, and the change is volume is declining. Part of it is volume is generally declining. That's why we see smaller ranges in the candles. All you have to do is look at the average true range. You don't even have to look at volume. Just look at average true range. The Trade Scanner Pro is also evidence of that, because if you notice the risk, when things were really moving, the risk was much higher on these time frames. Remember? It was 100 points a candle, 150 points in a candle. That's ridiculously high. Now we're looking at 30 points. So that's a change. That's an important change. That means the candle ranges on the average are a lot lower. That means there's less follow through. Typically, that translates into there's less volume. And this is going to continue. And it's going to get worse. That's usually how the cycle goes. So keep that in mind. Summertime. So there are a number of ways to adjust: smaller size, trade less, trade only at specific times. Like if you're doing this type of trade where we're looking at very small time frames, you only look at 9:30 to 10 o'clock Eastern time. That's it. Don't look at the market outside of that time, because that's when your greatest volume is going to happen, if there's any volume at all. It's in that little window. Or the afternoon, 3 o'clock to 4 o'clock. But I don't like that time slot, because for one, if you make a mistake, you're stuck. If you make a mistake, it's going to be very hard to make that money back. The market's going to close. Also, there's at 3:50 or 10 to 4 every day, there's something called market on close, and you can get a spike at that time, because all these orders, these orders that were sitting outside the market or whatever come in, and sometimes you could see a spike. You can actually play that move as sort of like an event, but it's very random. You don't know which way it's going to go. So you could try to set up a bracket there, but sometimes it doesn't really do much. It like will spike up, maybe get you in one side and then like stop you out. Like that can happen too. But besides that, there's really nothing. So, or you could be really outrageous and trade the London session. What I like about the overnight, which I don't, sometimes I look at it, but rarely. If I happen to be up at 4 a.m., I'll look at it. And it appears that the markets are a little smoother at that time, sort of like this, right? A little smoother. That's just my impression during the London session, Eastern time, but that's really an inconvenient time for me. If I was in Spain, then I would trade the London session because that's really convenient at that time. And in the afternoon would be the New York Open. Spain is like, I think, one of the best locations for this style. So anyway, yeah. So no, looks like no signals, no signals. I'm not going to take a signal now. We're an hour into this, and that's it. Let me see. How am I doing with people? Oh man, YouTube is so depressing. All right, I'm not going to rant. You've heard enough of that. So all right, guys. So again, recap. We were looking for longs, never got a long on these time frames. I'm not going to force trades. I was able to avoid a stop out, so I was able to stay away from my $120 loss. So no change on my account. Okay, no problem. Right? We'll do this again on Friday and see if we could find a trade opportunity. That's what we do. Now, of course, look, I know other fake gurus, they'll be streaming all day and they're looking for opportunities. So I guess there's more opportunities for entertainment or to learn something there, I guess. But this is the time slot that I do because I got other things I got to do. Anyway, so I hope we learned something today about patience. We learned something about the value of the filter. And you could use that even if you don't have the Trade Scanner Pro. You can use a similar concept maybe on some type of system that you're using where you filter out, you add an extra layer of filter to try to adjust to this type of environment. Instead of throwing out your strategy and trying to find a new strategy, there's really nothing wrong with the strategy. It's just the momentum isn't there. And this strategy depends, my strategy depends on momentum. So when momentum shrinks, we have to add some sort of filter to compensate for the tendencies that you will see in a low momentum environment, like fake outs, like lack of follow through. So that's really the key lesson there. All right, you guys. So I appreciate you taking the time and putting some comments in the chat. If you haven't liked or subscribed, do me that favor and we'll go from there. Okay. So again, I stream every Monday, Wednesday, Friday at 9:30 a.m. Eastern time. We look at this for an hour to see if there are any trade ideas. Sometimes we have some, sometimes we don't. At least I was able to avoid a losing trade today. I'm happy about that. All right, everyone. So again, yeah, that'll be it. Enjoy the rest of your day, or the rest of your evening, wherever you are in the world. And thank you very much for watching.